Welcome. In this video, can ZBCN coin price rally? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Upon closer examination of the chart, a wide-angled, large-scale descending trend line that had been exerting significant pressure on the price for an extended period becomes evident. This trend line had previously pulled the price downward on multiple occasions, creating key contact points where sellers gained strength and reversed the market direction. Given the importance of trend lines in technical analysis, the break of this descending structure, followed by subsequent price action, signals a shift in overall market sentiment. Recently, the price has decisively broken above this major descending trend. Such breakouts are typically considered signs of a trend reversal in technical analysis. Especially when they occur on higher time frames, these types of breakouts suggest that the market may be on the verge of a long-term directional change. More importantly, the price not only broke through this descending trend line but also performed a textbook retest in line with classic technical analysis principles. A retest, when the broken trend line is revisited, serves as a confidence boost for investors, confirming that the breakout is genuine rather than a false move. During this retest phase, when the price touched the previously resistant trend line, that level acted as support. This indicates that despite attempts to push the price lower, buyers stepped in aggressively and defended that zone. This behavior is a very positive technical signal, showing renewed buying pressure and an expectation of continued upward movement among investors. Currently, the price is clearly gaining upward momentum. Especially when such a significant trend line is broken and the price sustains movement above it, it strongly indicates that the market structure has shifted from bearish to bullish. From a psychological standpoint, these kinds of breakouts carry great importance. Descending trend lines can persist for years and often symbolize widespread pessimism in the market. Breaking above such a major trend suggests that sentiment has turned positive and investor confidence is being restored. With the rise in price, there may also have been an increase in trading volume. Many investors view these large trend breakouts as opportunities and monitor these levels closely for entry points. In technical analysis, buying waves that follow these breakouts often result in significant price increases. Furthermore, this development may trigger buy signals in algorithmic trading systems, contributing to increased liquidity and facilitating upward price movement. Another element that could support the sustainability of this uptrend is the formation of higher lows and higher highs. This structure is the foundation of an uptrend and indicates that the price is progressing steadily. From this perspective, the price action post-retest may mark the beginning of a strong bullish formation. As this structure continues, investor confidence is likely to grow further, increasing the potential for the price to reach higher targets. With these developments, the price has now emerged from the shadow of the descending trend line that had triggered multiple downward reactions in the past. This suggests that psychological barriers in the market have been broken, and investors are now taking more confident positions. For investors who had been under sustained bearish pressure, encountering clear buy signals is a crucial foundation for a continued rally. Market participants appear to have left past fears behind, and the price is now reflecting this positive sentiment. But we cannot base our analysis on trends alone. Let's take a look at other metrics as well. Stay tuned. When analyzing the long-term chart within the framework of the Elliott wave theory, it becomes evident that the current price structure is moving within a particularly noteworthy and promising formation. This setup represents an exciting phase, especially for long-term investors, as the price appears to be progressing within the third wave, widely considered the most powerful and dynamic wave of the theory. This wave typically signifies a period of major upward movements, strengthening positive market sentiment, and a swift shift in investor psychology toward bullishness. Currently, the price appears to be actively advancing through this third wave, yet it has not yet reached the characteristic target levels of the 1,618 and 2,272 Fibonacci extension ratios, as defined by the Elliott wave theory. This indicates that the ongoing price action is not yet complete, suggesting that significant upside potential remains. In line with the nature of the theory, the price is continuing its climb, moving toward these two important Fibonacci target zones. The third wave is often the longest, steepest, and most forceful, as the majority of market participants tend to join the move during this phase. With the trend becoming clearer, key breakouts occurring, and technical indicators generating buy signals, investors are prompted to take bolder positions. Confidence grows among both retail and institutional investors. Therefore, the fact that the 1,618 or 2,272 levels have not yet been reached can be viewed as a positive development. It implies that the rally may still be in its early stages, leaving ample room for further upward movement. Price movements aligning with Fibonacci extension ratios is a common occurrence in technical analysis. Analysts who apply Elliott wave theory place significant importance on these levels, as they represent zones where prices have historically paused, reacted, or reversed. The 1,618 level is often considered a minimum target, while 2,272 serves as an extended target in strong bullish scenarios. The current price not having yet reached these levels suggests that a substantial window of opportunity remains open for investors. At this point, the structure of the price action presents a highly consistent picture. The peaks and troughs observed in previous waves have progressed in a manner that aligns well with the classic Elliott pattern. Following the first wave and its corrective second wave, the price appears to have transitioned into the third wave. This transition began with a volume-supported upward move, and the subsequent steeper and more decisive price advance strongly confirms the start of the third wave's characteristic momentum. The price's current position can technically be described as the pre-breakout zone. Being within the third wave, where strong rallies typically occur, suggests that the current level may represent the beginning of a much larger upward movement. The fact that the 1,618 and 2,272 target levels have yet to be reached highlights a significant technical gap and potential for further upside. The space between the current level and these targets forms a broad, bullish corridor, offering substantial opportunity for investors. The price movement above the 200-day exponential moving average, one of the most important technical indicators on the chart, points to a very promising structure, especially for long-term investors. The 200 EMA is one of the most highly regarded trend indicators in technical analysis, and when an asset is positioned above this level, it is considered a bullish signal by many analysts and investors. The fact that the price is currently holding above this critical technical level suggests that the overall market outlook is evolving towards optimism. The 200 EMA is an indicator that takes the average of past price movements and shows the current trend in a smoothed manner. However, this average not only provides a value that is free from short-term fluctuations, but also influences the decision-making of major players, namely institutional investors and algorithmic systems. Therefore, if an asset is below the 200 EMA, it's usually considered a bear market signal, while if it's moving above it, this is important evidence that the bull trend is continuing. The fact that the price is currently positioned above the 200 EMA can be taken as a sign that the market is regaining its strength and investor interest is increasing again. The 200 EMA shows us the long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.